Campbell McCrary here, Amvest Capital. Welcome to the Amvest Capital Inc. live webinar with Guanajuato Silver Company, or G Silver. Guanajuato trades on the venture as GSVR and as GSVR on the OTCQX. Hope you enjoy today's program. Will also be available in replay mode. We'd love for you to send in questions. There are a number of ways to do that. Simply go to that Ask a Question of Management. We'll get the question and we'll ask it. Very simple. Along the way, you can also find links and downloads to the stock page, this presentation in PDF form, and that's quite important. And at the end of the show, you can share your feedback here. Housekeeping note, just acclimating to our new platform, and we're noticing little aspect ratio issues with our the slides, so forgive us if a little bit of the right side's cut off in G Silver's presentation. Jumping in, Amvest Capital is a New York-based specialist investment management and corporate finance firm focused solely on the natural resource space. Please note this call is most definitely for informational purposes only. Very pleased to have with us James Anderson, who's the chairman and CEO of Guanajuato, and has 20 years in the business, and is actually born and bred in Timmins, Ontario. So mining's in his blood. So James, if you want to take us through the show, and we'll circle back with the Q&A.
Fantastic, Campbell. Thank you very much, and thanks everybody at Amvest for putting this together. Also, yeah, I salute Amvest for trying out new technology. There's a couple little bumps in the road with the technology here this morning as we the slides of our particular presentation aren't rendering just right, but there's only 2 or 3 of them that are doing that. So I'll point that out to the viewers along the way, and I think it'll be just fine. So here you see near-term silver and gold production, and what our computer is doing is putting a chunk of silver where the word silver is and a chunk of gold where the word gold is. Campbell, maybe this is actually a good idea. Maybe we'll just take out the word silver and gold in the presentation and just put in some silver and gold. It'll be like hieroglyphics, ancient Egyptian hieroglyphics.
I actually thought that was your new look, and I was going to tell you that looked good.
Perfect. So. Okay, so I'm going to just go right forward. I will be making some forward-looking statements, so please be aware of the disclaimer and what all that might mean. Mexico's next precious metals producer. So for people who don't know the story and for people who do, we are on track, on time, and on budget to become Mexico's next silver and gold producer. We have purchased a mine and mill in central Mexico, in Guanajuato, Mexico, from Endeavour Silver Corporation. We announced the letter of intent to do that in December, raised 17 million Canadian dollars in March, closed that transaction in April, drew down $7.5 million US in a silver and gold loan facility in July. We have gone about 95% of the way in refurbishing the mill at hand. We've already started mining and stockpiling material in our laydown yard at El Cubo, and we expect to be throwing the switch on the entire mill in about 2 weeks' time, with first concentrate sales being in October. So we're very proud in an industry, in a business that's usually progress is measured in months and years and decades sometimes. We are very proud of how quickly we've managed to transform our company into a silver and gold producer. Projected annual production, people always ask, so once you get the mill running, how much silver and gold are you going to produce? Usually we talk about it in silver equivalent ounces. This is an operation that is a silver and gold producer, no base metals here. And the value will be about 60% silver and 40% gold. But if we look at that in silver equivalent ounces, according to our PEA, we will ramp up to about 1.8 million ounces of silver equivalent. And according to our in-house model, our financial model, we'll be ramping up to about 1.5 million ounces in 2022 and about 2.5 million silver equivalent ounces in 2023. Well, let me move on from this slide so you can see what El Cubo looks like. El Cubo is a fascinating asset. It's been in production on and off, but mostly on for about 200 years. Now, the last time that this asset changed hands was in 2012 when Endeavour Silver purchased El Cubo from another publicly listed Canadian company. They paid $200 million for this asset, for the mine and the plant at that time. We paid considerably less, and we think that we've gotten an outstanding bargain on the whole asset. So at that time, what Endeavour did was they paid $200 million for the asset, and then they spent about $30 million building the plant that we are currently refurbishing. And what does that refurbishment look like? And I want to emphasize this is not a rebuild. This was the plant itself was shut down in 2019 by Endeavour in November of 2019 in a very professional way. Our job really is to replace a number of component pieces, hoses, belts, the inside of ball mills, the ball mill liners, things like that. We have also replaced some bigger items. So all of the pictures on this slide were taken by me with my iPhone about a month ago in Guanajuato. And what we're doing here over on the left-hand side is we are using this big crane truck to move in 2 new crushers, a secondary and tertiary crusher. We also have a primary crusher, which is all being refurbished, and it's just outside of the scope of the picture over on the left-hand side. But just a few days ago, we ran those the crushers, so they're all cemented in now. All the lubrication systems are attached. So we ran those, and they're working very, very well. The next thing that we will do next week is to start up the ball mills. So over here on the top right-hand side of your screen, you can see the inside of the mill plant itself. We have a 700, a 400, and a 300-ton ball mill, per day ball mills. So we'll only run 2 of them to begin with. The third one will come online in November, again, as we ramp up. And we'll be ramping up in terms of tonnage and in terms of grade for the next 9 or 10 months. And that will show as a ramp up in terms of silver equivalent ounces produced each month and each quarter. And of course, it'll show a ramp up in revenue through that time as well. And here you can see a couple of other pictures I took a month ago. One of our jumbo drills outside of the mine, but ready to go inside. And then on the right-hand side, one of the first ore haulage trucks that left the Dolores portal about a month ago. And we've been hauling this material out into the laydown yard for a month or 5 weeks. We have about 10,000 tons of material that's ready to be processed as soon as we make those final steps in the next couple of weeks to get the plant all operational. The miners, of course, are getting anxious because we're running out of room in the laydown yard, in the patio in front of the plant. So hopefully we'll be on time and on schedule like we are with everything else here to be able to do that. Just a couple of other points. We paid Endeavour $15 million for this asset, and a lot of times people get the idea that it's kind of a ma and pa operation. I can tell you that's not what this is. This is a big mine, and it's a big mill. You can see the 4 meter by 4 meter access, so you can drive a pickup truck for about 25 minutes inside of the mine. The top picture here with the purple images, what you're looking at there is a Vulcan computer model of all of the accesses that exist in the mine. So you can see all of this 4 meter by 4 meter access to access areas within the mine. The development work that represents is probably $100 million investment. So that's just another comment on the size of the operation and on the excellent deal that we've got in acquiring it. Over on the, well, actually, I'm going to go one more page here. So what you see here is a long section of the 3 principal stopes that we'll be mining at El Cubo for the next 24 months or so. All of the red dots, those are drill holes that were drilled by Endeavour, so we've got a good handle on grade and the size and scope of these stopes. The 1850 stope is where we are currently blasting and mining and removing material and bringing it to the surface. We need to do a little bit more development work at Sept, so there's good access under the 2175 stope and the 1850 stope. At Sept, what we'll have to do is to drive about 150 meters worth of development work, worth of drifting, in order to start removing that material. All of the yellow dots, what you see here, are drill holes that we're drilling right now in order to give ourselves better grade control as we mine these areas. So I think this is a good spot, a good slide to comment on why Endeavour sold this asset. Obviously, we get that question a lot. Endeavour paid a lot of money in 2012 for this asset. They then spent a lot of money on the plant. And what they wanted to do was to mine this mine at about 45,000 tons a month. Now, we love El Cubo. We think it's a fantastic asset, but it is a very typical narrow vein, high grade, central Mexican epithermal system. The veins are only so wide. When you try and mine them on a wider basis, what you end up doing is getting a lot more dilution. You can get tons for your mill, but that's not necessarily the best financial extraction of the valuable mineral that is in place here. Endeavour has moved on to a bigger development project called Terranera, and they simply wanted to take what they felt was a smaller operation and sell it to another company. For us, we view it a little differently. We think that El Cubo can be a hub and spoke mining operation where we're taking material not only from El Cubo, but from our other project called Penguico, and potentially from other assets within the area as well. We can ramp up over the next years towards that 45,000 tons of production, but only ask 25,000 tons a month from El Cubo. And in that way, we'll be able to mine this in a more efficient manner, we feel. And how will we do that? We'll mine it on a more narrow basis. So when we look at this area and we use a 1.4 meter wide minimum vein extraction method, what we see here is about 240,000 tons. Counterintuitively, when Endeavour did it, they were looking at a wider minimum vein, minimum mining width at about 2.6 meters. When you do that on this particular system, what happens is a lot of this grade ducks under cutoff grade and you lose tonnage. So ironically and counterintuitively, when you mine these stopes and these veins on a more narrow basis, you actually end up with more tons in sight in the computer model, and that's what's driving us in this area. But there are numerous other areas within the mine where we'll be able to use that new thinking, that different approach, to be able to establish more tonnage and establish our mine plan into the future. Here's a good look at some of the vein and stockwork material that's left over. It's very good grade. The fellow who's pictured in this slide is Pedro Delgado. And I just want to back up a moment and discuss all of the people that we've hired recently. The city of Guanajuato is a UNESCO World Heritage city. It has great restaurants and beautiful parks and coffee shops. It's a wonderful place to live. And so our ability to be able to draw excellent engineering and mining talent from all over Mexico, and certainly from the Guanajuato area, has been relatively easy. We put out a news release a few weeks ago regarding us hiring 168 people for the operation so far. 167 of them are Mexican nationals. We're very proud of that. This is a an operation that is driven by not only Mexican mine workers, but all of the Mexican mine managers, including our partners, Gerardo Dorado and Hernan Dorado, who's our Chief Operating Officer. So moving on just a little bit to a couple of the high-level things that you'll want to know about our company. We did hire Bear to do a PEA study for us. What that shows with the material that we have in site currently is a 7-year mine life. It's a 7-year mine life with projected operating costs of about $9.42 per silver equivalent ounce. So once we get this operating here in just the next few weeks, we feel that we can be self-sustaining in capital, almost immediately. And about Guanajuato, if you're not familiar with the area, I already spoke about the beauty of the city itself, but it has a 480-year-old mining history. The Spanish were mining silver and gold in this area from about 60 years after Columbus sailed across the Atlantic. So people have been mining here for a long time and very profitably. Again, this is one of the slides that hasn't rendered so well on this new system, but I think that everybody can get the major points here. Our major shareholders are Endeavour Silver Corp, who continue to be very supportive, not only at the head office level, but on the ground as we take their asset and move it back into production. Mermacan Capital is a Connecticut-based precious metals investor. They own about 10.3%. Dan Oliver is what this is supposed to say. He is the fund manager for Mermacan and also one of our directors. So Dan's been very helpful in terms of sourcing capital for the company to this point, and obviously a very supportive shareholder. I'll just move on here. Eric Sprott, I think we all know that's a personal investment from Eric, not Sprott Capital or Sprott Asset Management. EMA GARP is another fund, Boston-based, but very specific in investing in small and micro-cap precious metals companies. These are Canadian numbers, so let me just give you an up-to-date US dollar figure for cash in hand whenever these companies are moving towards production. Of course, we're burning money pretty fast, but we expect first revenues and first concentrate sales in October. So from a US dollar perspective, when we looked just a few days ago, we had cash in the treasury of just under $7 million US dollars, and that should easily carry us through towards first production. Again, this hasn't rendered all that well, but let me just give you a couple of highlight numbers from our PEA. 1.8 years as a payback period. You saw this figure earlier, 1.8 million ounces of silver equivalent average production per year, and an internal rate of return at today's metals prices of about 105%. And actually, I say today's metal prices. I hope I'm not jinxing anything. The study was done with silver at $19.49, gold at 1,500. So the IRR is likely to be considerably better than that. So I'll just jump on to our other project in the area. So one of the reasons why we were very interested and desirous of purchasing El Cubo is because we've got another project only about 5 miles, probably 3 miles in a straight line, but about 5 miles by road away from El Cubo. So here you see El Cubo, and it's El Pinguico that I'm talking about. El Penguico has a unique, interesting, storied history all of itself. This was the highest grade mine in this area about 110 years ago. It was listed on the New York Stock Exchange 110 years ago. So it was a pretty big deal in its own right back then. The Penguico is an exploration project, but it's kind of a hybrid insofar as it has 2 stockpiles of material. One which was a waste pile from the mining 110 years ago, but there's a significant amount of gold and silver in that material. and it simply sits at the side of the road 5 miles away from our mill. We can use that lower grade material, which grades about 103 grams of silver equivalent, to be able to make sure that we've got tons available for our mill in the first months of production as we reopen El Cubo. There's also an underground stockpile that we can do the same thing, which is of much better grade. However, Penguico is principally an exploration project at this juncture. We bought our own underground drill rig about 7 months ago, and we've been drilling ever since. We're currently drilling drill hole number 19. This is the first, these are highlights over here on the left of the first batch of drilling results that anyone's ever done from Pinguico, really, in a modern context. But you can see what we're doing here. We're systematically drilling off an area that has relatively easy access. Level 4, you can walk in all the way out to the underground stockpile. That's about 800 meters. So, I don't know, we'll call that half a mile, I guess. And level 7 is open for the first little ways. And when you go down the shaft, you can walk along level 7 for about 800 meters. We've stopped any ideas of developing the underground access right now. We want to be able to drill all these holes between now and January. And somewhere along the way, we'll develop an idea about how we're going to access all this material. We think internally that most of the material that we're coming up with here can make its way into the mill within the next 36 months. It's a little hit and miss right now as we are the first people to drill this. However, some of the grades approaching 900 and over 900 grams of silver equivalent are outstanding. That will help very much in our decision and decisions in order to how to develop that area. One more comment here about a bigger target at depth at Penguico. So the Veta Madre structure is a regional fault structure. Veta Madre is mother vein in Spanish. They've been mining this for about 480 years, and they've taken 2 billion ounces of silver out of this structure within the region. This structure was mined by Fresnillo, the world's largest silver mining company, for 30 years, right beside us. This structure will likely continue to the west and intersect at some point our narrow but very high-grade Penguico system. So at the confluence of those 2 vein structures, that's a really great drill target. We had wanted to drill this a few months ago. Because we've been so busy moving El Cubo forward into production so swiftly, that's kind of gone onto the back burner, but we want to be able to drill that target within the next few months, and that's the sort of game-changing drill target that junior investors always like so much. I mentioned the particularly Mexican focus of the people who we've hired. Charlie Ortiz is a mine planner. Charlie had 6 years of experience at El Cubo before we hired him. He's one of the guys principally in charge of figuring out where and how and what kind of sequencing to mine El Cubo right now. Pedro Delgado was pictured earlier, a mine manager with 33 years experience in Mexico, about 25 years experience in Guanajuato and at one of Fresnillo's mines just to the north of El Cubo. So mining at El Cubo is really like coming home for Pedro. I mentioned Hernan already, embedded in the company, one of the chief architects in creating what we're doing on the ground. But I do want to mention Ramon Davila. Ramon joined our board of directors about 6 months ago now. Ramon, in my estimation, has one of the best CVs in Mexican mining. He was the chief operating officer and on the board of directors, our first Majestic, when that company went from 0 production to 12 million ounces of silver production per year. He took that company as the chief operating officer from 4 employees to 4,000 employees. And we're very, very fortunate to have Ramon on our board. Over the last number of months, Ramon has become more and more involved in what we're doing on the ground. When I was in Guanajuato 4 weeks ago, Ramon was there from Durango, where he lives, for about 4 days. He went underground. and the type of feedback that we get from Ramon has so much experience embedded in it that it really gives, when he gives us a thumbs up about what's going on and how we're going about it, it really gives us a lot of confidence to be able to continue to drive forward towards what we're doing and towards becoming Mexico's next silver and gold producer, which we feel we can attain within just the next couple of weeks now. So Campbell told me to get to a slide that would be kind of fun to watch while we take questions. So I think I'm going to go back to here. We can look at Pedro looking at the rocks. That to me is the essence of what we're doing here in Guanajuato. So Campbell, do we have any good questions out there for me?
Yes, we do. Give me a moment, and we will load them up. And again, please ask questions. Very simple. All having to really do most part about cash flow and being in production, getting into production. So could you speak to the cost structure of this mine and how resilient it will be to changing silver prices?
Yeah, okay, so that's a great question. Our outstanding CFO, Lisa Day, and I did kind of a stress test on our financial model just last week. And we brought silver prices down to $17.50 and gold prices down to about $15.50. And over our 3-year internal cash flow model, we're still cash flow positive over those 3 years. Bringing the price of the metals down that dramatically and restarting this, we do have a little, some bumps in the road over those 3 years with regarding internal cash flows, but over the entire period, it's cash flow positive.
What do you anticipate your silver and gold Asic will be next year after ramp up?
Yeah, I'm sorry, I can't comment on that. The securities regulators won't allow me. The PEA that was done by Bear Dolbear does not include an Asic number. It does, however, include that $9.42 operating cost number. And I'm happy to sort of discuss that in a framework. In our model, we never quite get to $9.42 operating cost, but we do get down to about $10.50 and $11 of operating cost per silver equivalent ounce. And with silver being, $22, $23, $24, wherever it is here this morning, we can make a lot of money operating this mine at this time.
Very good. Status of operations. What are the immediate challenges, current cash positions of the company?
Well, current cash position is about $6.8 million US. Current challenges, we have a we have a weekly management meeting every Thursday. Last Thursday, I know Hernan, our chief operating officer, really had quite a big smile on his face after the pre-commissioning of the 2 cone crushers. There's really very little in terms of big things left to do before we start moving material through the mill. However, the way that Hernan described it was, all the big things are done. Now we've only got 1,000 little things to do. So there's a number of little things to do here over the next couple of weeks. Those are our main challenges. In terms of mining, we're ahead of schedule. I mean, we've got about 10,000 tons, as I mentioned, in our laydown yard from stockpiling material from El Cubo. And it's getting to the point where the miners are saying, okay, come on, let's turn that mill on so that we've got a place to put all this material.
Could you talk specifically about how you will mine the veins narrower than Endeavour did?
Yeah, well, Endeavour used a lot of mechanical mining, oftentimes with 4-meter widths. We'll use a lot of limited cut and fill, and even when the veins pinch down, very small, let's say, a meter or less, we will use resu mining. And, one thing, Campbell, that I didn't really point out when we were looking at this image, and it's a really good illustration of what I'm talking about. This drill hole here gets 194 grams of silver equivalent over 4 meters. Now, in today's pricing environment, that almost makes sense, right? You can take 4 meters out, but in a lower pricing environment, would you want to do that? That material will become very, very close to cutoff grade. We would rather mine 1.4 meters of 470 grams of silver equivalent. We will take less material out of the mine, so mining costs on a per ounce basis will be lower. We will process less material through the mill, so that's handy. And just as important, and very few people talk about it, we will have less material to put into our tailings facility. Therefore, our tailings facility can last longer. And when you look at mining all over the world today, you can build a mill, that's easy. Do you have a license to have a tailings facility? And do you have tailings capacity? That's often a big challenge. And we have about 4 years left at today's planned capacity in terms of tailings capacity, tailings facility, but taking less material out of the mine at higher grade will help that a great deal.
Great. Are there any plans to turn your resources into reserves at El Cubo?
Yeah, not currently. We'll see how that goes. Sometimes the financiers want reserves in place, but it's kind of a, I don't know. It's philosophical in nature for me. The mining industry has turned itself into an industry of report writing rather than into an industry of extracting value from rocks. And I would rather drive this company towards being that kind of company than a report writing company. The reports that we have right now have enabled us to construct a viable mine plan. And as drilling continues, I think that we'll be able to put more and more material into what would be called a measured and indicated category. Whether we go all the way to put that into reserves, there are no immediate plans for that. The rocks will be through the mill and turned into silver and gold before we get there.
Any permits pending for the operations?
No. At El Cubo, we have, and this came with the purchase of El Cubo. All of the permits necessary for mining and milling at El Cubo are all in place.
Is it your operation unionized?
It's a complex question. There is a union in place at El Cubo. We are in discussions with the union about creating a new collective bargaining agreement. However, Mexico has an interesting take on that. They allow several different unions to compete with one another. So in this interim period where we have no collective bargaining agreement with the union that was in place previously, it's kind of a nebulous answer to that question.
Very good. I'm going to pass this over to Stuart and Adam.
Yeah, thanks for the update, James. So speaking, Adam, your mic's on. So speaking of technology, have you looked into utilizing new technologies at the operations like autonomous jumbos, riders, etc., or anything like that?
Yeah, I mean it's more on sort of a Christmas wish list right now, Stuart. Everything that we're doing is driving towards production and cash flow, as quickly as we possibly can. But I agree with the general nature of that comment and that statement. Mining technology has moved light years over the last 20 years or so. There's all kinds of different technologies, and our VP of Corporate Development, Richard Silas, was just at the Las Vegas mining show. I think he said that there were 1,200 different exhibitors there. But he came back like a kid in a candy shop saying, we need to get one of these and one of those and one of these and one of those. And I think that there's a lot that we can do in terms of mining El Cubo, this 200-year-old mine, in a 21st century kind of way. But I also think that, you know, we've got to be able to walk before we run. So I'd be happier, I think, to tackle some of those questions and issues maybe in about 6 months or so.
Yep, fair enough. And then on the exploration, what type of exploration techniques do you helps you, refine the drill targets, like geophysics, any underground geophysics you're doing?
Right. So it's a whole package of questions, really. So let me just discuss El Cubo here for a minute. So at El Cubo, in the whole region, really, but specifically at El Cubo, there are transverse perpendicular fault structures and vein structures to the main northwest trending Villalpando and Dolores systems. Those were principally ignored by Endeavour because Endeavour had this idea that what they would want to do, sorry, my computer screen's moving, not sure why. Endeavour had this idea that they wanted to produce 45,000 tons a month. They had to do that. It had to be, larger tonnage than maybe the mine is comfortable in supporting. Therefore, they didn't look at these even smaller vein structures. However, they can be very high grade. They are usually higher in gold than silver content on a value basis, and they don't necessarily have to be small. There is a mine that was mined by Fresnillo for a good period of time to the north of us called San Nicolas. That is one of these transverse veins. So they can be good grade. We want to go after them. We've already started sampling a number of those underground. We can use the drill that's currently doing a lot of infill drilling for us to do some of that exploration in the future. So that's, I think that works very well. So the part of the question mentioned geophysics. For a number of different reasons, geophysics generally isn't used as much as perhaps it should in central Mexico. There's a general feeling amongst a lot of the Mexican engineers, well, why would we want to waste our time on that? Let's just go and mine it. I think that geophysics has a large part to play with us expanding the footprint of all of these structures at El Cubo. I think IP and modern, state-of-the-art IP is where we want to go, and we will be having a program like that in the months ahead.
Gotcha. Yeah, and I'll just go to this slide. Just wondering when any of these regional targets, when you might be planning to kind of drill them versus your kind of mine plan drilling.
Right. So we're drilling right now at El Cubo, and it's very much mine plan drilling with some holes being dedicated to some of that expansion drilling that I was talking about. Penguico, we're drilling exploration holes constantly into that Penguico system. The area that you see to the northwest of Penguico, and for anyone that's I don't know, new or doesn't quite get it, we started off with the red claims. All of the claims in blue, all the mining claims in blue, came with the El Cubo transaction. So we didn't just get the mill and the mine and the resource. We got 7,000 hectares of prospective ground in this area. But this area right here, Stuart, the Endeavour called this Los Penguicos, kind of an homage to the Penguico name. But they did a lot of surface work, a lot of mapping, a lot of sampling, and worked up a number of drill targets on here that they never pursued. We think that is kind of our next stage of exploration in the area, is to take what we're learning at Penguico and use that in our exploration of this claim block right here.
Gotcha. And then could you discuss the historical stockpile you had at the project and plans of processing that? Sure.
So what that question refers to, sorry, I'm going in the wrong direction. What that question refers to is this stockpile right here, which I showed on this image. So this is a waste pile that was derived from mining between about 1896 and 1913. So it may have been waste 110 years ago, but it has gold and silver in it. We proved that last year when we did a 1,000-ton bulk sample at Endeavour's other mill in the area called Bolanito. So that material is readily available for us. There's 85,000 tons, and it's lower grade, to be sure, but all we really have to do is to put it on the back of a 20-ton truck with a front-end loader, drive it 8 kilometers over to our mill and process it. And not only can we make a little bit of money doing that, but I think most importantly, if ever, as we're ramping up El Cubo, if ever we have a problem in accessing a number of tons that we'd want to run the mill at, which is about 25,000 tons a month, we have this material ready for processing.
Gotcha. And then, sorry, I lost my train of thought there. And then how much, like how long will that last in terms of months?
Well, it's
to the tonnage and then the mill.
Yeah, I mean, this material here is 185,000 tons. So at 25,000 tons a month, I guess we get about 7 months worth of production. That's not really how we want to do it. We want to be able to blend a little bit of that material with the material that we're getting at El Cubo. Hernan always likes to talk about this material as oxygen, and I always like to say that it's like an emergency tank on a deep sea diver. And if you say to a deep sea diver, when would you like to use your emergency tank? And the answer actually is never. So we would prefer to always have that in reserve, for any eventuality in the future.
Yeah. And then with the exploration, do you guys own your own drill rigs, or are you using a contractor?
Yeah, so one of each right now. We bought a small diamond drill rig in January. I think it arrived the first week in February. That's the rig that is underground right now. So we've taken the rig underground at Penguico. You can walk in about, 500, 600 meters. And then there's a cross cut about 80 meters. So we've set the drill rig up in there. And basically we're, going boom, 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 boom. It's a small rig. It's not, hugely powerful. So it's a little slow. But frankly, I'm okay with that. It stops you from drilling a whole bunch of holes that you wouldn't drill because you don't have the assays back fast enough. So, all of this is working very well. And then we hired an outfit called Rock Drill, which is a pretty big drilling company in both Mexico and Peru. And they are drilling, let me just go to there. Well, they're drilling cebolletas right now. So all of these yellow holes, in order to give us better grade control as we start to mine this area, we will know much more succinctly what the grade looks like through all this.
Gotcha. And then, it leads me to another question on assays. Where are you sending your assays, and are you considering building your own lab at site, which would help speed up, especially with the mine plan drilling? Right.
So last question first. Yes, we're building our own lab at site. The sort of the first half of that should be ready by the end of October. So currently what we're doing is sending a lot of the assays from here to a non-ISO lab near Guanajuato. And we're doing that because we get turnaround, between 3 and 5 days with our assays. When we send our material to SGS or Bureau Veritas, and this is true all over North America right now, the assays are so slow, we get assays back sometimes 3 months later. So those are the assays that we're using to report on new drill holes at Pinguico, but we simply can't wait that long for data at El Cubo, so we're using a non-ISO lab.
Gotcha. Well, thanks for that. I'll pass it on to Adam.
Well, thanks, Stu. You guys hear me okay?
Yes, sir.
Great. James, great presentation. A lot of the questions I had on my mind, you've already answered. But just following up on sending samples to a non-certified lab, I assume you guys are including duplicates and blanks and standards in order to ensure quality of those results.
Yeah, well, that's right. I think you know Bill Galen, who's on our board of directors. Bill has extensive experience in as being a QP and in terms of designing programs of which you speak. So he's working currently with Hernan and with Lauro Barahan, who's in charge of our exploration at Pinguico, to have an internal protocol for that. The general components of that, Adam, are that we will be sending 15% checks to an ISO lab, and then we will be sending duplicates of those checks to another ISO lab in kind of a spot check methodology, so that we can compare all of those.
And I like this figure because I kind of think in my head, like all of the blue stuff is stuff that Endeavour maybe would have left behind because the widths weren't wide enough for them. And then the edges of cabolletas, those are limited just by the drilling, I assume. And as you put in those yellow targets, this area could actually grow.
Yeah, I think that's right. Where I've focused actually, so you mentioned cebolletas. On the other side of this image, Adam, so out in this area here, can you see my cursor?
No, I cannot.
No? Okay, so way over on the left-hand side, you see CAS 47?
Yes.
Yeah, so keep on moving to the left. There's a big area out in that direction which has not been drilled, right? So isn't included in this at all. We probably won't start drilling that till January, but that's it. And further out to the north is what it is, and to the left there. But there's a big area that's between two well-drilled areas, right? That because Endeavour didn't think that this was worthwhile, that everything was too narrow. We don't have that view. We think we can be very profitable mining these narrower veins at very good grade. So that whole area out there is undrilled, and I see absolutely no reason why it wouldn't contain vein material, as we'll be drilling between two very well-known structures, or two very well-known areas of the Villalpando vein structure.
Also, it looks like as you're getting shallower at Cebolletas, you got some very wider zones. Are you able to adjust your mining method to reduce your costs to take those wider zones in at a lower cost per ton?
So we can adjust the mining method, and certainly Hernan is always speaks about we have to be malleable. Let's let the mine dictate to us the mining method and not the other way around. Whether we would be able to do that at the top of Cebolletas after mining more narrowly underneath, I think we could create another bench and maybe change our tactics. But I think that I would probably be best to let Hernan comment on that at a different time.
Mm-hmm. Are you guys backfilling or sorry, you said you were using cut and fill, correct?
Yes.
Okay, so that'll be effectively sort of natural backfill, I guess the question
there will be a transition though, Adam. The way that Endeavour has left us the mine is sort of panically inclined. So there will be a number of months of transition as we move from that way of thinking into a cut and fill methodology.
Gotcha. And I guess this brings up the potential for backfill, sort of in my mind, brings up the issue of the tailings, which you addressed. What would be the cost? you already have based on the PEA, sort of a 7-year mine life. You said you have 4 years of tailings. What's the cost of a new tailings facility you will need by the end of year 4, presumably?
Yeah, so we've discussed this internally a lot, because that's one of the challenges, not only in Guanajuato, but everywhere. Pardon me. Our current thinking really is to apply for an expansion of the current tailings facility using dry stack. And I think that that's the way that mining is going to go, not only in Mexico, but in other places in the world, further into the 21st century. Also, remember, this is a mine that has been mined for a long, long, long time. There's an enormous number of places underground that we should cement tailings back into the earth. And it is a little bit more expensive to do that. And we would have to spend a little bit of money on capital in order to do that. But the surety of that, I think, is way better than waiting for national bodies to give you permission to have another tailings facility, or even an expansion of it in a conventional tailings facility. So we're much more leaning towards that in the future. We do have 4 years to figure that out, though.
So perhaps you guys would perhaps think about building a paste plant underground and then start using the tailings for that paste?
Correct.
Gotcha. Let's shift topics a little bit, Jim. Can you talk about the royalties on both Penguico and El Cubo?
Sure. So there are no royalties at El Cubo. So that's easy. Penguico is more complex. What we announced last year about this time was a repurchase of NSR royalties that existed at Penguico. So we've got 2 more payments to make, one in March and then one the following March, of about $500,000 apiece. And then those NSR royalties at Penguico will be eliminated. There is a residual net profits interest royalty only on the stockpile material at Penguico, not any in situ material that we're discovering right now. So how we deal with that in the future, that's up for some discussion. Maybe we just pay it as we go until the stockpiles are eliminated.
Sounds like some complicated accounting, trying to figure out the profits on just the stockpile when you're blending that ore in with fresh ore.
I wake up in a cold sweat thinking about it sometimes. But yeah, I mean, kidding aside, you're right, and that's one of the reasons. It's one of the arguments for just trying to eliminate it.
Mm-hmm. Yeah. Question on the concentrate that you're going to be producing. Presumably, the concentrate deals that Endeavour had before you at El Cubo, and do you have deals set up for somebody to offtake that concentrate?
Yeah, we're just in the process of signing a concentrate sales agreement with one of the metals traders. Because El Cubo is so well known, I think we had eight different proposals in front of us. But we're just in the final throes of being able to sign a definitive sales agreement with one of the concentrate purchasers. And I hope to be able to have some news for the marketplace and that commenting on that within the next week or so.
Mm-hmm. And can you comment sort of in general terms, about how that works, for the audience that may not be familiar with these contracts, as far as your payable rates and, the charges that you are responsible for as far as subtracted from the revenue that they give you?
Yeah, well, so in terms of numbers, I don't want to talk about that too much. I think I'd probably end up saying stuff that I'm not supposed to say at this juncture. So, but let me discuss that in general terms for people who may not quite understand, how that works. At El Cubo and throughout most places in central Mexico, at the end of our processing, what we create is a silver and gold concentrate. What I will say is that ours is a silver and gold concentrate. There's a lot of companies in central Mexico that create a lead or zinc concentrate with silver, or they create two concentrates. Ours is a concentrate that has silver and gold in it. Very little in the way of other deleterious materials. There's a little bit of arsenic in it. But other than that, it's a very, very clean concentrate. We sell that to a metals trader who then markets it to refineries in various places in the world. So the ultimate destination for our concentrate probably is the Far East, South Korea, China, maybe Japan, but there's also outfits that send the concentrate to Europe as well. Adam, that's probably about all I want to say on that.
I think it's probably pretty well known, that for typical concentrate charges, somewhere you get for precious metals, you get somewhere around the 95% payable rate. I'm sure the exact number is probably a little different for every operation, and then you effectively pay the transport charge as a deduction to the revenue that the trader pays you. This is pretty standard terms.
Yeah. Again, I don't want to talk about the standard terms, but in terms of in terms of us sending it to where the trader takes possession of it, there are a number of warehouses in Manzanillo. That seems to be one of the favorite places for the traders to set up shop and export the concentrate around the world. So we will send our concentrate to Manzanillo, and at that time, finish the transaction with the traders.
And then, as both the stockpile and eventually fresh ore from Penguico is combined with the ore from El Cubo and made into one single concentrate, do you anticipate, any differences in the quality of the concentrate from El Cubo alone?
Yeah, so that's a great question. We'll be making two different concentrates to begin with. So we will run Cubo material and Penguico material in campaigns rather than blending them at this time. We think that that's a better idea in terms of us understanding the differences between the two. We do have some experience having done that 1,000-ton bulk sample last year from Penguico, but there will be subtle differences, we think, too, in terms of Penguico's, above ground stockpile, which was waste and, contains a lot of country rock, as opposed to some of the vein material from Penguico. So I think some of the subtleties of that we will work through in the months ahead.
And I know it's still early, Jim, but what's your vision of how to bring the fresh ore in from Penguico, as you guys are able to define it with your ongoing drilling program?
Yeah, so a lot of internal discussion about that. I think at the end of the day, Adam, what we will do is try and get underneath all this material. So once we finish this drill pattern, there will be a number of tons. I have a number in my mind, but that's just on the back of an envelope. But if we can get underneath this material, we can drop down all of this material as well as the material from the underground stockpile. So I think that's our general path for success at Penguico. The only thing that I would say is that what we want to be able to do is to drill more of these holes as we're getting some material that's better than a kilo per ton, of silver equivalent in grade. We want to be able to know where those higher grade areas are to make sure that we don't do anything from an engineering standpoint that sterilizes those areas and we can't get them out. So I think it's wise for us to continue to do what we're doing in a systematic manner, gain more knowledge here, and then if we do need to sterilize any areas for engineering purposes, for stability purposes, well then let's sterilize the low grade stuff.
Excellent. Jim, let me send it back to Campbell if there are additional questions to the audience before we run out of time.
We've run out of time, and there are additional questions, but we're just not going to get to them. So
we'll make sure they get over to James, though.
Yeah, I was about to say that. Stu, if you can mute the mic, thanks. I want to thank everyone for tuning in. Important thing now or when you log out is to share your feedback, and it'll get straight to Jim. And with that, I'm going to pass it back to Jim and James, and just tell everyone also a copy of this event will be available in about an hour and a half at amvestcapital.com/replays. Take it away.
Fantastic. Thanks very much, gentlemen.
Okay, enough said.
Thank you. See ya.